All right, traders, welcome to today's recap. This is Christian from our Tribeca Trade Group, and this is the end of the week, Thursday, April 18th. Tomorrow, the markets are closed for Good Friday, so we've got a long weekend. Easter is on Sunday, so today was April option expiration, and as always, a nice opportunity to kind of go through the week's price action. As I always mention on Friday, obviously today's Thursday, but at the end of the week, I really kind of enjoy going through the video and talking about a little bit of the larger points, taking a step back and just kind of analyzing what we've seen so far, and looking ahead to next week, right? So there's definitely felt like some things kind of changed a bit this week. We had a couple sectors break down this week. Well, I would say one sector, but a lot of areas within the sector breakdown. This week was, I think, a challenging week to make money in every day, because the price action was, what, 3 out of 4 days we opened on the highs for the most part, and then we kind of sold off, and a couple days failed to 3 out of the 4 days failed to reclaim that opening print. What was interesting was just, I think one of the most notable things from the week was just like a ramp into the open every day. I talked about that. I was chuckling about that yesterday, about how or why that's happening. But certainly that happened several days this week, including this morning too. A complete ramp into the open, and then a sell-off thereafter. So it's really tricky price action, and excuse me, I'm not sure if that's cognizant of toppy price behavior, but it feels like something isn't right with that when you open at the highs, and especially like the ramp into the open and then complete sell off for a couple hours thereafter. Just doesn't feel right. So one of the things that we talked about in, I believe it was last Friday's video, and probably a couple times in the beginning of the week, is how the price action, I've got multiple different studies and indicators on my charts, but one of which is this yellow line. It's been really good for kind of telling me, keeping me abreast of the trend of the market, short-term trend, right? I mean, I've said this, all the way back here. I had many videos where I talked about how price never really lost the 5-period moving average, except for just a couple, very small time, in here a little bit, in here back in February, also in here a little bit, and more so in March. A couple days here at the end of March, but it's the majority of time the price has been above. Now the price is still above, so kind of complaining about the price action, but it's still above that yellow line, so it's not really giving you any bearish signal. And again, I think the price is the most important thing to follow. Do I think that the yellow line is extended above the blue line, right? The 5-period exponential moving average over the blue line, the 20-period? Sure, I do think that's extended, and I think that you can kind of see from the past that usually when this gets way above the blue line, usually the yellow line comes in to meet the blue line. Do I have a predictor for that? No, it's just an observation. So let me just detail, there's a couple points that I wanted to make, but anyway, here was the price action for the week. This was the first week probably in a couple months that I've had a down week in terms of P&L, and small. I don't think I was down like more than 1.5% of my portfolio this week. So it was just kind of a choppy session. A couple days I was flat, a couple days I was down small for the week. I think down for today, I finished right around flat again. So, that's, I think, just an indication of the market being, normally in choppy markets I'm very good, but this was just typical the way that the market opened on the highs, right? And you could see that. I wanted to just draw that out here in the 5-minute, because I think that was an important thing for this week. But you could see what I'm talking about. And I'll use SPY. I usually use S&P futures, but on Thinkorswim it's a little bit easier to see the SPY. But here was what Monday. Where's Monday of this week? Thursday, Wednesday, Tuesday. Let me zoom out here a little bit. And by the way, this happened Friday too, right? Friday was a big ramp into the open, and then that happened. But you could see the session here on Monday, right? Monday we opened on the highs, sold off, rallied back, but finished just a little bit under the open. Tuesday we also had this big ramp, and we closed on the that one on definitely lower. Wednesday, also yesterday, ramp into the open. This one we also did not come back. But again, so all in all for the week, we went nowhere. But just tricky price action, very tricky price action. So I think it is paramount to continue to watch price. I do look at some things. I think people look at a lot of different indicators for clues instead of just paying attention to price action. So I think price action is number one, right? But if you're looking for clues about things that might unfold for that can kind of help you with your positioning. The things that I look at are number one, the VIX, which is at a 12, right? So I look at not only the VIX, you'll hear me quote these a lot in the trading room as well. I'll put this out on our private Twitter feed, but I look at the VIX for the S&P, right? Because again, the VIX, all it does, by the way, is it measures. I think people confuse this or they read into the VIX, and really the VIX, all it does is it measures what short-term options are pricing. If the volatility is moving up or down in those 1 month out option prices in the SPX. That's all it does, guys. It's not a major, it doesn't talk about sector rotation. So the VIX is not going to pick up on if everything. So just as like, for example, we finished flat for the week, right? But we had a big move down in healthcare. We had a big move, financials rallied this week. A couple other areas, industrials did well this week, right? So if you've got, let's just say hypothetically, XYZ sector, or let's do ABC sector, goes up 4% for the week. And so that's ABC sector. XYZ sector finishes down 4% for the week, right? That's big volatility. But if they're equally weighted, if those two sectors, let's say, are the only two sectors in an index, so the index could be completely flat for the week, right? So the VIX is not really going to pick up on that. But meanwhile, you've got big separation, and if you happen to be short ABC sector and long XYZ sector, you got you got creams, right? So very important that what these things measure. Also, I see a lot of people tweeting out, including myself, right? I look at levels in the S&P. If we're going to have that major sector rotation go on, looking at support and resistance alone in the S&P isn't going to cut it if that's the market that we've got, right? So you could continue to say, so I think that gets lost, and that's why I'm explaining it a little bit. But if you continue to look at support and resistance in the S&P, and let's say the S&P doesn't go anywhere for the next couple weeks, but we get these major sector rotations, that's not going to help you in your P&L looking at the support and resistance alone. You have to look at other things. Sorry to say, I know a couple people that's their bread and butter of just tweeting out index levels, but you're not going to see that if there's this wishy-wash sector rotation in the S&P. So I also look at what's going on in the VXN, which is the VIX for the Qs, because sometimes, like we see this week, some decent separation happening between something going on in small caps. But I also look at those as well because they're not all the same. And again, it gives you a little bit more depth when you're not just looking at the VIX. Again, it depends what you're trading. So let me back that up a step, right? If you're just trading the indices, then looking at support and resistance is fine. But if you're trading single stocks and we've got that sector rotation going on, then looking at those support and resistance levels won't help you that much in that situation. Again, completely depends on what you're trading. Or if there's total volatility comes into the overall market. Right now we're seeing volatility amongst sectors. Again, VIX instruments, and I see it being quoted on various different financial media. Why is the VIX so low? It's doing exactly what it should be measuring: short-term volatility of the whole index, not the individual names, not sectors within. Okay, so that's one thing that I wanted to cover. Yeah, IWM versus SPY, that's something else that I look at quite a bit. I will bring this up on Bloomberg. We looked at this yesterday too, but I think it's good to look at. So, and I'll explain, right? Sometimes I don't explain why I'm looking at these things, but let's bring up IWM versus SPY. These are all ratio charts. So IWM is in the numerator, SPY is in the denominator. So why is it important? Because take a look at what happened towards the end of last year, right? IWM started to really trail, and it was a leading indicator. So if you look at this, right? Let me bring up. Let me see if I can do this somewhat coordinated. Because I got a couple questions about this on Twitter when I posted it, so that's why I'm breaking this down, right? So here's, this was basically September and October where we started to go down, and we kind of hung around for a little bit, right? We chopped from October to December. We chopped around, but if you look at IWM, right, the whole time it was breaking down. So that started basically in the beginning of September, which again, I think was leading, right? Because we didn't really break down. The S&P was still going up. And it started to kind of right in what was this, October 10th was where we broke the 50-day moving average. So I think it gave a pretty good sense when it started to break down in September, something was up. So notice we've been doing this for the last 2 months. So this has to stop, in my opinion, or it will. I do think it will spread. If IWM continues to trend lower than the SPY, something's up in the market, in my opinion. We want IWM to lead the market move. We want IWM to outperform SPY, not underperform, right? So, we're right basically at where we were in March, and we had some follow through, but we're getting awfully close to that March low, and that worries me a bit. Overall, it worries me the last couple weeks, the last 2 weeks of IWM underperforming. I also look at advanced decline line. That will tell you if sometimes you can spot a divergence between the advanced decline line and the overall index. So breadth will usually start to break down. So let's look at that. Advanced decline line. It's such a tricky symbol that I can't symbol in Bloomberg that I can't remember it. A lot of things I can remember. That symbol I cannot. So it's kind of hanging around the highs. There's no signal yet, I would say. This is for NYSE stocks. You could also look at this for the S&P. They have several different advanced decline lines, right? And when things start breaking down like that, when we start to lose breath, usually it's a sign. Decline line. Multitasking late on Thursday, not good. Here it is. So let's see if there's any difference in this one. No, not yet. I mean, it's a little bit off the peak, but there's nothing really here yet. That's usually pretty bullish. All right, so let me go through, and then what else? And then finally, option activity. Option activity. So again, I'm mentioning clues that instead of watching price action, so price action is top of the list for me, right? That will tell you before anything else, because what happens is when you're not watching price activity, people formulate opinions And sometimes their opinions, if it's not backed up, right? So it's kind of an interesting point. You want your opinions to be convergent. You want there not to be divergence between your opinions, really, and price action. I think, anyway. I just kind of made that up. But, sometimes your emotions and your thinking will think that the market has to come down. I mean, I would at least wait until the 5 period moving average is breached. But I mean, it does look like it is starting to roll over a little bit. So, what does option activity do? It really gives us a sense if we're starting to see a lot more hedging, like aggressive hedging on the index side, if buying has dried up, right? If there's no more incremental buyers, sometimes there's nobody left to kind of take that market to the next leg. Are we seeing that right now? I think right now it's earning season, so we're getting all different types of flow. As I've said before, option activity around earnings is extremely noisy to figure out what's going on. Every once in a while, you can find a trade like we did yesterday in BlackRock, right at the end of the day. Not Blackstone, sorry, BX, where we had this helped my P&L today, no doubt. I made on a very small trade, by the way, just a 6 lot. I bought a 6 lot for 26 cents, and I was taking them off for well over $2. So again, sometimes that's the power of options. So I got a little bit lucky with that one today. But so these are good. So option activity will really kind of give us a little bit of a heads up into whether or not people are buying, they're not buying, what they are buying, and so on and so forth. All right, so that's a couple things. Another point that I heard on Bloomberg a couple times today, which is very valid, is okay, healthcare is breaking down. Is that a sign of things to come in some other sectors? Don't know that yet. I could tell you what I do know, right? And that is, I'll give you an example of trades. I always try to give you an example of what I'm trading. I see that on Twitter a lot. Not to be critical, but you see at Tribeca Trade Group everything that I'm trading. There's no looking after the fact at trades and saying, oh, this went from $5 to $15. What a great trade. No, we're actually trading here. It's great to do those look backs, but so I'll tell you, for example, I was in XBI, looking for a breakout. So here's the thing, right? If you're in options like I was, now you could have stopped yourself out for maybe like a 50% loss. I think we were able to hit one target in this trade, which I kind of forced, which was a good thing. But this price action is going to happen so fast. If you're in stock, you could kind of get out. You could put your stop price. But the thing is, if you're in an option and it's a short-term option. Let's say you purchased it at $1.50, and by the time you start to realize that something is breaking and hits your stop, in the option, right? So that's on a chart, right? That's with the stock, or in this case, the ETF. But the option is going to go from, let's say, $1.50 to 75 cents. So you're going to stop yourself out for a 50% loss. I don't know. That's something that is, if it's in your risk model, I don't see much point in doing that. But if this happens my point of making this is if this happens in other groups, and it happens as fast as it happened in biotech. Now, I know that this is biotech and healthcare, they're a little bit different. There was some political stuff going on, but we started to see that in some other growth groups a little bit. Nothing broke down, but there was just a little bit of selling pressure in things like the software group, which, is what it is. It gets a little bit extended from time to time, this group. And you could see that there was a hammer bar in there today. But you have to think about your positioning, right? You have to think about how many positions you have on right now, the size of your positions, right? These are all things that are important in your process. So if you're feeling like I am a little bit, that there's not much reward, I think, in getting long here or staying as long as I was a couple months ago, you have to think about quantity of positions, how many, what your position size is. And also, if you're trading options, what duration are your options? The most sensitive options are going to be your short-term options, right? So, obviously we just got through April expiration, but May options. I'm not even talking about the weeklies. The weeklies are, they'll move like on steroids. But if you're in May options, right, and we have a little bit of a 2% down, 1.5 down 2%. So again, this is like a scenario analysis. I'm not predicting anything, but what happens to your portfolio if the market goes down 1% or 1.5%, and you're holding May options, right? And that's a big portion of your portfolio, and your long delta. You're going to have a major loss on your hands, unless you're hedging yourself out in some other manner, right? So just put that in terms, because not too many people talk about these concepts on Twitter. They just talk about, crazy things, right? Which I'm not going to go into because that's not me, right? This is real trading, not hypothetical trading of what happens on Twitter. So yeah, I mean, I think things. So that's kind of what I'm looking at towards next week. Next week, and I'm misquoting this. I don't have the exact number, but I think there's close to 200 names in the S&P that are reporting next week. So if we saw a little bit of sector rotation this week, there's going to be it's a very, very difficult time, I think, to be, have a really long portfolio, with all the new information that's coming out, because portfolio managers will wait for this information and make some changes in their portfolio. So I think it's kind of a week to kind of sit back a little bit and not to overtrade with the heart of earnings season next week. And I sent out a bunch of names in the tech world that are reporting next week out to members. But so that's basically it. I do think, going back to this XBI example, right? I do think that there's going to be a lot of opportunities in this space. Maybe not next week, but just in the next couple of weeks, because we've got a lot of new. We have a lot more companies reporting in the medical device space next week. Edwards Life Sciences is one that I have my eye on. But there's a few other ones that report. Again, we've got just a huge amount of names that report next week. But I think opportunity will come from the sell-off, right? When every name in a sector gets crunched like this because there's been selling across the board. So, for example, XLV traded. I mean, look at the volume in XLV. I mean, clearly this is happening across the board in the sector. So where is this going to leave this group? It's going to leave it with buying opportunities, in my opinion. Not every name should be taken out to the woodshed, right? So that's going to. So going back to the loss on the XBI trade, I think it's going to create a lot more positive opportunities. So this one trade is a downer. But if I can make it up, spotting 3 or 4 different names within this group that are going to be great buying opportunities, it's going to work itself out, in my opinion. But you got to structure the trades correctly, have plenty of time. I took positions, one swing trade in one name today, which I'm not going to go over because it's not fair to members. But there was a nice story on that name. I also day traded a little bit of EW today for some profits. So, there's going to be ample opportunities. And by the way, if you look at this, there's a lot of VPOCs down here. So I don't know, you got a nice hammer bar on a lot of these. But if you look at IHF, I think this was the group that was the first one to get hit, the healthcare providers. And if you notice, there was a VPOC taken out, and there's not one until all the way down here at 135. So we could see a nice bounce from here. Now maybe it only goes up to here, but for now that was the downside target that was taken out in IHF, and this was your best performing group today. So I think a good sign, considering that this was the first to go down and now is the first one to go up in the space. And we'll see what we get for next week. All right, guys, so I think there'll be some opportunities. And that's the other thing. Like, if you're playing the game smart, right, and taking off some exposure on the highs, you're going to be ready if we do get a little bit of a pullback because of whatever reason to kind of get back into some names, right? Already in the software space, which just was a little bit volatile this week. But you've got a nice setup, I think, in ZS, right? You've got your defined support. So I started a trade today But you've got some defined support at 60.75, and those opportunities are going to reveal themselves. But you have to be patient, and you've got to have that cash on the sidelines to take advantage, to spot the new opportunities rather than worrying about your existing portfolio. As always, the video is for information purposes only. I'm not giving out advice. I will say on Tuesday when we get back, we had some have some new members joining us this past week. So on Tuesday we're going to be going over more in detail about everything in my process, what I'm doing, why I'm trading sometimes stock, sometimes options, sometimes call spreads, sometimes put spreads. We're going to go over all that, my methodology about what I'm doing with options, why I take some option trades, sometimes I don't. But sometimes I incorporate that into the decision process. So that's Tuesday. You have to be a member for that webinar. So you can check us out at tribecatradeGroup.com and sign up there for your membership. Thanks for watching. Have a great long weekend. Have a happy Easter, everybody.